A new trade deal has been announced with Indonesia, and unlike some of the so-called free trade agreements negotiated in recent years, this promises some real benefits for Australian farmers. It's worth pointing out that Indonesia has an annual live cattle trade with Australia currently worth $748 million, while boxed beef totals $178 million. Indonesia is our best wheat buyer. Last year they bought wheat worth nearly $600 million. It's our second biggest cotton buyer. Last year the market was worth $150 million, while dairy and horticulture are emerging as crucial destinations for Australian exporters. Now, the live export of cattle picture moved again last week with the appointment in Jakarta of a new Director of Livestock Services. That, coupled with the trade deal just mentioned, might help resolve the weights and permits imbroglio. Last week, prices ex-Darwin were steady. There was export action in Darwin, Karumba and a significant loading at Geraldton. And at the sale yards this past week, prices were helped by a 13% fall in supply. Of note was the quality of cattle on offer, reflecting the good season in eastern states. Accordingly, the Eastern Young Cattle Indicator closed Thursday nicely above $3.60. This is 21% up on this time last year. Now, processors in the West are said to be so heavily booked, producers in WA are reportedly sending cattle east, such as the impact of the poor season over there. So feeder steers slipped, but other categories went firm to positive. That cow market is intriguing, more on that next week, and it's hardly news that the dollar is playing havoc with exporters. Now, before I leave beef, let's touch briefly on the looming issue of hormone growth promotants in cattle. Coles Supermarkets has announced they will no longer sell beef from cattle which have used HGPs. Last week, David Foote, CEO of Australian Country Choice, the major supplier of beef to Coles, told the Queensland Rural Press Club Coles were warned of production losses, but that made no difference.
We've been defending the use of HGPs for 9 years. So about every spring, I build up my case of the economics of why we must have HGPs. So I've won up until Wesfarmers took over and brought in a bunch of international retailers who had a course and an objective. So I told them how much it would cost, and it's been printed in the papers. It's a $30 million program of increased cost of goods. So I was taken, we've been told, because we have such a long supply chain, we've known since March 2008, and our actual suppliers have been known since January this year. Part two of your question is, there is, according to the HGP manufacturers, there could be 16% loss of production. We've spent, obviously, the last 2 years and the 7 before it measuring the impacts. We think that they're not anywhere near as significant as stated on the label or in the brochure. And we've counteracted that by, we think it'll take us 44 days longer in the paddock, in our backgrounding phase, and about 6 days longer in the feedlot to compensate for the HGP.
That's David Foote from Australian Country Choice. It'll be interesting to see how Coles decides to market their HGP-free beef and how Woolworths responds. Now on to lambs, where turn-off in October was way down on last year, minus 28%. Quality is said to be exceptional. So prices reversed a recent trend, lifting 16 cents. Sheep slaughter numbers are way down, reflecting a producer temptation to pump out just one more lamb from their old ewes. And the pig market is firming, supply is steady while demand is rising. Pork and bacon prices both went up. Moving to grains now, and it looks like high wheat prices can't attract enough new plantings to ease long-term supply concerns. The Pro-Farmer Grain newsletter suggests prices should remain well supported through all of next year. Another piece of market chatter says expect $400 a tonne by the end of year 2011. In Chicago, soybeans remain white hot due to the insatiable demand from China. Wheat was steady at what is a strong price in historical terms, and corn went up a fraction. But the local ASX struck some headwinds in the form of our lifting dollar. WA wheat delivered January dropped $8, and there was an even bigger fall on the East Coast. Sentiment is the bulls are just around the corner. And local spot prices followed overseas trends. So we dropped a little. Sorghum out of Brisbane was off $6, while canola reacted to price pressures in Canada and Europe. Now to New York, where, like most exchanges, there is what's called a limit up on prices every day. That is, prices are not allowed to skyrocket. They can just go up by a certain amount each trading period. Cotton is so hot, the first 4 contracts written Wednesday of last week were limit up. By the close of the week, the December contract was up well over 17% in just 1 week. Here's the graph showing how cotton has escalated to the stratosphere. In fact, there are now reports from Europe of manufacturers declaring bankruptcy because they can't afford the raw material. Cotton closed above a remarkable $1.40 a pound. Now that's a rise of almost 20 cents in 1 week and represents a bale value here in Australia of around $670, although reports from the paddocks indicate a lot of market volatility. I can tell you just a few weeks back, cotton producers were very happy to sign off on $550 a bale. And if you can't grow cotton, sugar is the go. All indications point to strong price support through next year. Here's the sugar graph, and up it goes. It's almost doubled since May. Of course, it's all related to the US dollar, but factoring it all in, it's still a red-hot commodity. So sugar closed the week close to 32 cents a pound. And what's happened to wool? Last week saw substantial price rises across the microns, especially at the fine end, and all the action produced a 3-week rise in Aussie currency terms of 83 cents. Analysts expect this spike to flush out any wool left in storage, but the tip is there's not that much, and this price firming could continue. So the Eastern Market Indicator jumped 4.3% to close the week at 990 cents a kilo. And with those positive trends, that's the Landline check on prices.